Know China to do better business. Save time and money with expert insights on China trade and investment. Welcome to our channel, Trade with China. We are jumping right into a deep dive today. We've got some data that's really, well, redefining global finance, wouldn't you say?
Absolutely. It's quite something.
We're going to unpack the structural shifts behind China's emergence as the world's second-largest wealth management market. And, crucially, explore what this massive pivot means for your investment strategy right now.
Yeah, and it's not just, steady growth we're observing.
Sorry, exactly.
It feels more like a fundamental restructuring of the whole economic landscape over there.
And for global investors, for partners, this isn't just a minor detail. It's like the main event.
It really is. What's truly fascinating, I think, is the sheer size of it and the resilience behind this growth. The core driver seems to be this double act. China's sustained economic development, naturally, but also the continuous, really rapid buildup of people's wealth. Right. We're essentially seeing a huge demographic shift. The middle income group is expanding fast, and that creates demand for more sophisticated wealth services. And the scale is unlike anything we've seen elsewhere.
And the scale, yeah, the numbers are just, eye-watering, frankly. Our sources are confirming that resident investable assets in China, they've now officially gone past 300 trillion RMB. That's roughly, 42 trillion US dollars, all looking for professional management, strategic allocation.
It's an enormous pool of capital. And to put that in context, look at the industry's capacity. The total asset management, or AM scale in China that covers everything, mutual funds, bank products, that already topped 170 trillion RMB back in mid-2025.
170 trillion.
That figure alone really cements China's place as the world's second largest wealth management market, no question.
Which makes the question of where all this capital flows probably the biggest strategic puzzle in global finance right now. But here's the critical shift, the analysis that our sources really highlight. The increasing links with global markets have fundamentally changed things for cross-border investment. It's not really optional anymore, is it?
Exactly. That's the key takeaway. For the high net worth clients, and even for this rapidly growing sort of mass affluent group, cross-border investment isn't just a nice to have, whether that's Chinese money looking outward or foreign capital trying to get in it. It's gone from being an optional choice to, well, a must-answer question. It's become a necessity.
A must-answer question. I like that phrasing. It's powerful. So what happens then to the financial institutions, maybe the ones that haven't quite prepared for this mandatory global deployment?
Well, they risk getting left behind, frankly.
Is it mainly client demand pushing this? People wanting diversification? Or is there a regulatory element making it inevitable?
It's really a convergence of both. But I'd say client demand is the real engine here. As wealth grows, people get more sophisticated, right?
Sure.
Domestic returns might look a bit volatile, so clients feel they have to diversify globally. But, the system is also being built to make it easier. The message for institutions is pretty clear. If you can't offer integrated global services, you risk becoming, marginalized. Capital will just flow around you to those who can.
Right.
So yeah, this shift feels mandatory for competitive survival.
Okay. So let's unpack the mechanics of this acceleration. What's actually powering this historic momentum? Apart from just the sheer volume of new wealth, we sort of identified two key engines, right?
Yeah.
Ongoing capital market development that creates new places to invest.
New instruments, better access.
And then genuine technological breakthroughs, particularly how smart tech is being applied in finance.
Yeah, and the capital market development is important, obviously, but that technology piece, that's where foreign firms really need to pay close attention, I think. We're seeing things like advanced robo-advisors becoming quite common, offering personalized, low-cost asset allocation, especially to that growing middle inquiry segment.
Makes sense.
And things like AI, big data analytics. They're becoming standard for modeling risk, for really customized client service. It's moving the whole industry away from just traditional, human advice.
And industry leaders, they're framing this growth not just in terms of profit, but almost like a public utility. They talk about wealth management as an essential bridge, a bridge connecting two really critical, massive objectives at the same time. One, putting vitality into the real economy, providing that long-term patient capital. And two, preserving and hopefully increasing the value of wealth for ordinary citizens.
And that bridge concept is actually quite central to understanding Chinese financial strategy. It signals that wealth management isn't seen as just a commercial thing. It's viewed as a tool for national development, for socioeconomic stability. But, building and maintaining such a vital bridge, that needs incredibly integrated, really sturdy infrastructure.
Which leads us perfectly to the structural response we're seeing. This trend towards comprehensive, full-spectrum financial holding companies, FHCs. For investors trying to get a handle on this, the rise of the FHC seems like the single most important competitive dynamic right now.
Precisely. And if you connect that back to the bigger picture, you immediately see the advantage these FHCs have. The ones with comprehensive licenses covering banking, securities, fund management, trusts, all under one roof.
Because before, those regulatory silos made integration tricky, right?
Exactly. Cross-selling, true integration, it was difficult. FHCs are designed to cut right through that complexity.
Let's use the CEDIC group as maybe our main example here. Their recent strategy discussions, like that second wealth management conference they held in October 2025, they really showcase the scale and the strategy of these integrated giants.
Oh, the scale is just staggering. And it's because it's leveraged across so many different sectors. CEDIC Group and its subsidiaries, their total wealth management scale hits 31 trillion RMB.
31 trillion, wow.
And they're serving a massive client base, over 200 million individual and corporate clients. This isn't just big, it's a whole ecosystem designed for synergy.
Yeah, it's the synergy that really matters, isn't it? Why is having a bank, a securities house, and a fund manager all under one roof such a decisive advantage, specifically in China's wealth structure?
Well, it basically boils down to really efficient capital funneling and complete client coverage. Think about it. The bank subsidiary, like CEDIC Bank, holds that huge deposit base. That's the raw source of that 300 trillion RMB we talked about earlier.
Right, the starting point.
Then the fund manager, like Huaxia Fund, can convert that low-yield deposit money into actively managed investment products. The securities arm handles the brokerage, the high-net-worth servicing. This kind of end-to-end control means they can capture the client at basically every stage of their financial journey. It minimizes leakage to competitors.
We can break down some of those subsidiary numbers too, just to show the heft of the individual parts within that platform. It demonstrates the strength of the whole structure.
Good idea.
For example, CITIC Bank's personal wealth management division alone, that manages nearly 5 trillion RMB.
Huge.
CITIC Securities Asset Management is 1.56 trillion RMB. Huaxi Fund's AM exceeds 3 trillion RMB, which is enormous in the mutual fund world. And CID Wealth Management's AM is over 2.3 trillion RMB. I mean, these aren't small-side businesses.
Not at all. They're massive financial institutions in their own right.
But unified by this single client strategy.
And that unified strategy is now laser-focused on global deployment. They're leveraging that complete domestic regulatory coverage to increasingly meet international demands, which, forces foreign firms to either compete directly with these monoliths, which is tough, or find ways to integrate themselves into this ecosystem.
Which brings us right back to the core issue for our listeners. Why does this trend, wealth concentration, integrated FHCs, why does it matter to foreign investors and traders right now? We've established that resident wealth growth is pushing demand for global assets. But what's the concrete evidence that this demand is actually turning into action?
Oh, the evidence is definitely there, and it's measurable, and it seems to be accelerating, especially through certain key regulatory channels. The prime example is the Cross-Border Wealth Management Connect scheme. You heard of this?
Vaguely, yeah. Tell us more.
So this initiative basically allows eligible residents in mainland China and the SARs, like Hong Kong and Macau, to invest in a specific range of, let's say, low to medium risk financial products offered by banks across the border.
Okay.
It's a structured two-way capital flow mechanism.
And the actual money moving through this scheme, that proves the point.
Absolutely. As of July 2025, this single program had already attracted over 164,600 individual investors.
Wow.
But more importantly, the sheer volume of cross-border fund transfers just through this one scheme had already gone past 120 billion RMB.
120 billion RMB. That's not small change.
Not at all. This isn't just theoretical demand waiting to happen. This is massive, tangible capital movement, actively seeking global allocation opportunities right now. It really validates that mandatory nature of the cross-border shift we were talking about.
That 120 billion flow.
Yeah,
that's accelerated execution defined. Okay. So if the market is concentrating wealth around these integrated FHCs and the demand for global allocation is proven and active, what strategic directions should foreign partners, service providers, providers be focusing on for future growth in this, well, enormous ecosystem?
I think the future is really defined by two things: collaborative technology and co-building. The market's evolving so fast into this complex ecosystem, right? And it's built on necessary cooperation between all the different players: public funds, securities, AMs, insurance AMs, trusts, bank wealth divisions. No single entity, not even the giant FHCs, can possibly service the full complexity of this demand all by themselves.
Okay, so the goal for foreign firms maybe shifts a bit.
Right.
From just competing head-on with the CITICs of the world to figuring out how to actually plug into their platforms and add specialized value.
Exactly. That's the pivot. Which raises a really important operational point. Institutions, both domestic and foreign, they must move towards offering platform-based, integrated, and globalized asset management services. This isn't just about selling one fund or one product line anymore. It demands total technological synergy across research, custody, fund allocation, client services, the whole chain. So foreign tech providers or maybe specialized asset managers, they need to realize they need platforms that can integrate seamlessly, almost plug and play, with the big FHC platforms. It's about co-building these ecosystems together to effectively service that massive 300 trillion RMB asset pool. Agility and specialization, those are the ways in.
That paints a very clear picture. Strategic necessity, comprehensive tech, deep partnerships. It's a rapidly structuring market. This has been a really insightful deep dive, getting into the numbers, the competitive structure. It's one of the most dynamic financial landscapes globally right now.
Definitely is.
So just to recap where we've been, we went from understanding that 170 trillion RMB total AM scaled to grasping the sheer size of the 300 trillion RMB resident investable asset pool. The key drivers for what comes next seem to be cross-institution synergy, that mandatory tech integration we just discussed, and this inevitable global deployment pushed by both client demand and regulatory nudges. So, considering the fast expansion of the middle-income group and that mandatory shift to global allocation, here's a final thought for you to mull over. What specific niche sectors within Chinese asset management technology, fintech, basically maybe specialized AI for regulatory compliance, or sophisticated tech for cross-border data security, which of those niches look positioned to see the most significant foreign investment inflows over, say, the next 12 months? That feels like the critical piece of the puzzle to think about next.
That's a great question to ponder.
This channel will bring you practical knowledge to navigate business, investment, culture, economic trends, and communication tips in trades with China. Your comments really encourage us to realize our video value and update more useful information. Please press like, subscribe now for actionable insights and win-win solutions. Not to miss the possibility to understand and make money in trades with China.